Good afternoon, everybody, and welcome to this week's weekly analysis session for the ASX. The first time that we've split the analysis sessions. So having the ASX on Friday afternoon at this time, and then we'll also do the US on Monday afternoon starting at 2 o'clock or 2 p.m. And you'll receive the invites at the conclusion of this particular session. So let's get underway. Again, our disclaimer, the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of the presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. All right, so portfolio management, we will go through and have a quick look at that. It hasn't changed from the last week, but we will go and have a look at the benchmark and have a look at any specific setups and also have some Q&A as well. So you'll see that last week we were in very high risk. We've remained in very high risk for the time being. So what does that mean from a capital management point of view? Well, assuming that you are invested just solely in the Australian market, that would mean that you would be, according to your trading plan, allowed to have a maximum drawdown of 15%. That generally covers most people in terms of their trading plan as a level of risk or a level of exposure in a low risk market rather. Currently, because we are in very high market risk, we use a 20% market risk multiplier. So applying that to the 15% allowable drawdown means that you're actually allowed to have 3% of your capital exposed as risk in the Australian market. So that's assuming that you are invested totally in the Australian market. Obviously, if you're splitting your capital 50-50, then you just divide that figure by 2, and instead of being 3%, it would be 1.5% for the Australian portion. All right, so let's go and have a look at the charts, etc. Again, just a reminder, we did a macroeconomics analysis session this afternoon. You should have all received the notification on that. And got Jeff to talk a little bit about GDP figures for Australia. The figures have actually been quite good. A little bit of information, background about the GDP figures. Why was there strength? Is there anything hidden in those figures, etc.? And what does it mean potentially for interest rates and what's happened with the Aussie dollar at the same time? Just a quick reminder that, again, Friday afternoon sessions will remain the sole focus for the ASX and Monday afternoons for the US of A. So let's go across to Beyond Charts and see what we can find there. First and foremost, our market risk. Again, we've got to check what the weather in the market is doing, and certainly our Australian market has just been bobbing up and down for a considerable period of time. It certainly has found a bit of strength over the last couple of weeks and starting to see some nice price action. We're still well under our longer term moving average there, so the market's still got a lot of work to do. Today's candle really pretty insignificant really there, and I think just waiting for clues from overseas markets over the course of this weekend. So it'll be interesting to see if anything happens over this weekend, or whether China does anything strange over the Saturday-Sunday break. We'll just have to wait and see. And no doubt if anything like that happens, we'll hear about it on Monday morning. But for the time being, we are certainly very much in very high market risk mode. I've done the scans already. The good thing about the Focus Beyond Charts is that they actually run if you like, an intermediate close, so that we can actually run our scans at 4:25. So rather than having to wait until later to do that. So I've gone through and run the scans. I could only find one trade setup that ticked all the boxes, so to speak. And that's on this stock here, MBE, Mobile Embrace Limited. Certainly, if we zoom out and go way back out, the only overhead levels or ceilings or resistance or points of supply are a long time ago, pre-2000 time. So that really is when the dinosaurs were around as far as this stock is concerned. So the main thing that we really need to be focusing on is the relative strength, and even though you'll see that there's been a little bit of underperformance through here, i.e. the relative strength histograms, if you like, have sort of tapered down just recently, just starting to move up and increasing in relative strength on all 3 time frames. So therefore, meeting the RSC aspect of it, and the only other element that we need to worry about is our price action, and that last trough here that's just now been confirmed by the formation of this last candle with a higher high and a higher low, now short-term uptrend. That trough in relation to second from last medium-term peak, well clear of it. So again, strong dynamics as far as the price action is concerned. So if we're going to get into this trade, it will have a fairly wide stop on a percentage basis. But again, it just means that you would need to adjust your position sizing just to make sure that you've got the same risk on this trade as you would with any of the others. The on-stop order for this particular entry is at 0.445, so that's 44.5 cents. So that's on stop. And your protective stop needs to go at least 2 ATRs below that entry level, and it also needs to be at least 0.5% below that last medium-term trough. So I've got a stop loss coming in there at 26 cents. That's been rounded down to 26 cents. It was 26.4, I think it was, thereabouts. So I've just rounded that down because increments at these particular levels are 0.5 cent. So I've just rounded that down. I couldn't find any others, so if you did happen to find one, if you can just type it in, and we'll go and have a look at it. But what I'd also like to do, whilst we're all here on Friday afternoon, is just go through some of the stocks in the watch list for the time being. APE, this is a stock that we've been in for quite a period of time. I'll just move that value line out of the way. You can see that we entered around about 11 months ago, actually, on the middle of April it was. So entering at around about $8, a little over $8. We had about 75 cents of risk on the trade, and you'll see along the way, along its journey upwards, there's been a number of price volume volatility signals, offering the opportunity, once you're getting to at least 2 to 1, to take some partial profits along the way. So if you've been in that, no doubt some of those profit opportunities will have been quite beneficial for you along the way. If you didn't take those and you've just been stopped out recently, you've still ended up making a nice profit on this particular trade. Just exiting at 10.45, which is just below our trailing 3 ATR stop there at 10.49. So that's an exit that'll come out of the watch list. But again, it's been a very good trade, and again, the relative strength really important considering what's happened with the rest of our market. So that was the only stop out. There were a couple of trailed stops. AIA seems every week talking about this stock, and it just continues to move onwards and upwards, and a really strong candle this last week as well. So for a recent entry, it's a nice thing that that last entry has been met with a lot of demand and dragging the trailing stop onwards and upwards. And again, from early entries around about 12 months ago, this stock has continued to move up. We had around about initially, I think, on that trade, around about 40 odd cents of risk on the trade, and that just continues to motor on higher and higher. So that's been a really well performing stock. VOC is another one, Vocus Communications, and again, just a nice strong candle last week. Good relative strength for quite a long period of time now, and dragging its 3 ATR trailing stop upwards as well. So they were the two trailed stops for this particular week. And my phone's ringing there, so I'll just turn that down for a little bit. The other aspect that I just wanted to go through, there is one new one trade that was triggered from last week, and that's GMM. And I think that's it might have been in my pendings list, was it? I don't think I've put it into my open trades just yet, so I'll bring that one up. GMM, General Mining Corporation. So there we go. That was the setup for last week. An on-stop order there at 33.1 in that particular example. So again, at these particular levels, that triggering price would be either 33 or 33.5. But again, nice big strong candle there, and that trade is now open, and we'll go into the watch list as an open trade. So that's about it for this week. Not a lot happening on the Australian market. Obviously, our primary market, the ASX 200, it's going to take a little while for a number of stocks to get back their appropriate sort of price action, and at this point in time, it's probably going to be several weeks before we start getting those nice setups with the price action that's ticking all the boxes. But other than that, not a hell of a lot to do. If you're in positions and your stocks are holding up well, just be patient, and I think you'll be well rewarded. And really interesting that, given the fact that our market has been moving down for such a long time, how many stocks are still holding up very, very well. And again, it just goes to show how important relative strength is. All right, folks, if you don't have any questions at this stage or any stocks that you'd like to look at, we might draw a close to it there. I will send out invitations for the US session very shortly, so keep an eye out for those. And just a reminder that they will occur. The US session will run at 2 o'clock on Monday afternoon, so keep an eye out for those invites. In the meantime, have a good weekend, and we'll catch up with you next week. Bye for now.